Awesome. Well, welcome to another expert interview. Really excited for our guest, Griffin. I'm assuming there's going to be a ton of knowledge, and it's a great topic because we're going to talk money. Without any further ado, Griffin, why don't you tell everyone who you are and what you do?
Yeah, thanks, Devin. My name is Griffin Kirsch. I am a financial advisor. My firm is GK Wealth Management, which is a registered investment advisory firm. So the licenses that I have to do what I do, hang with my firm, and what I do is manage money, ultimately do financial planning. And there's a lot of depth to obviously the financial planning world. But the subsets of that are managing investments, doing financial planning, tax work, estate planning, life insurance, et cetera, et cetera.
Awesome, man. Well, thanks for taking the time. I know you're busy and you got a little one coming soon, so that's exciting.
Yep.
So again, just thanks for being here, man.
Absolutely. Thanks for having me.
Cool. Well, let's jump straight in. I always like to talk trends. I think it's always interesting to see what's going on in an industry. So what are some trends in your industry that people should pay attention to or, be aware of?
Yeah, well, the world that I live in day to day is kind of like a roller coaster ride because market, is really where I think the most attention's at right now, the headlines that are driving markets up, down, sideways. There's a lot of moving parts, inflation, interest rates, relationship with China, the new administration, tax changes. I mean, you name it. The amount of money that's been printed, how does that, look tomorrow? How does that look next year, et cetera? So my world's really been kind of a roller coaster ride with the headlines, and the headlines have really been driving markets because we've never really come out of not a recession, but we've never really come out of a pandemic. And so there's just a lot of unknowns, but yeah, it's been fun. I mean, that's what I love about what I do is there's constant change, and how do you address those changes with clients and clients' investments and their planning. And a lot of the clients that I work with are business owners, and the business owner world as well as I do, but there's a lot of moving parts and a lot of unknowns, and there's certain businesses that are thriving with this new world. There's other businesses that are suffering, and there's a lot of businesses that are trying to kind of evolve and figure out what the next steps look like. But that's I think one of the reasons I love is being able to cater to the different industries that I work with, because at the end of the day, no matter what you do, everybody needs money managed. Everybody needs to plan for retirement, plan for kids' education, plan for estate planning, just little bit different variations of those same conversations. So.
Awesome. Let's talk about the to the moon trend, right? So we've seen whether it's a couple of the cryptocurrencies going to the moon, or or AMC, or right. So let's talk about it, right? You see people, oh, look how much I made, look at my returns. Like, well, do you have comments on what that looks like? I know this is something that's probably not going to last forever. So should people ride this wave? Should they not? Does it depend? What's your perspective on it?
Yeah, I mean, there's a lot of different ways to approach making money. I think what's going on with the Reddit type trades is easiest word is just speculation. You can definitely make money with this thematic trade that's going on, but it's not, people are not investing. They're gambling with this type of money, and that's kind of the easiest way to explain it. I'm not one to argue the opportunity, but the majority of my clients, I'm investing serious money. But some of my long-term serious investors want to take a slice of their portfolio, whether it's 1,000, 10,000, whatever, and, ride the ride. And, at the end of the day, the conversation is always, if this is money you're willing to lose, it might be interesting to take a gamble. But, the majority of what I do is it's not entertaining the GameStop, the AMC type approach. It's definitely interesting. And we're going to read about this in history books, that's for sure. But I'm not an investor in those companies personally. I've seen a lot of my clients, have some sort of interest. And of course, you hear all the people that have done well, but you also don't see the people bragging about losing everything. And so, you kind of got to read between the lines. But yeah, I mean, it's this new world, this social trend isn't going away, and it's a powerful trend. I mean, the Reddit page and some of the investments that are going on through that social platform have outperformed like most hedge funds. I mean, so it's you can't write off what's going on, but you got to do your own due diligence and take risks that you're comfortable with. So
love that. And I love the concept of gambling, right? I think that's the truest conversation, right? Is like, if you have some money that you're okay losing, then have fun and dabble, right? Like,
yeah,
follow it up as high as you want, and at some point know when to tap out.
yeah, absolutely. Yep.
What about cryptocurrency? Do you have thoughts or advice on, is Bitcoin a good long-term play? Should I diversify into crypto? What's that look like when you're talking to clients?
Yeah. Well, to start, none of what I'm about to say is advice, but what you are seeing is kind of widespread adoption of cryptocurrency, whether it's Bitcoin or Ethereum or what have you. That adoption by the Teslas of the world, the Squares, the PayPals, soon to be big financial institutions, is interesting. I mean, that in and of itself is interesting. And so the conversations with clients, and of course, all the clients these days, because they're paying attention, have understood that this is a new asset class, and should we invest, and what does that look like? Similar to the GameStop AMC type story, too soon to tell in terms of whether this is an investment or a complete speculation, but that widespread adoption, I think, is making a better and better argument as to having some sort of exposure, whatever that looks like. And I think having some exposure is worth considering, but again, subject to each investor's different goals and time frame, risk tolerance, etc. So yeah, I don't think the trend's going away though.
I love that. And I like what you said about, we're seeing the adoption side of it now, right? So when we see PayPal and some of these bigger players stepping into that arena, it's something you probably need to pay attention to some degree, right? And even from not even an investing standpoint, but even from just a business standpoint, right? Like, is it something that you should be willing to take payments in? Is it something you should look at, right? That's going to become a conversation, right? Is this something that you do or don't do? Yeah, that's a good advice. Is let's see who else keeps adopting. Let's see what the banks do with it.
Yep.
Good.
Yeah, and I think the federal government is trying to, at least per my understanding, create some sort of stable coin, cryptocurrency, so that it acts more like a currency than a, alternative. Because the reality is when you buy a cryptocurrency, you check your bank account today and you look at it tomorrow, it's probably a very different story. And I don't think most people are okay with seeing their bank account fluctuate like that. So the fact that people are referring to it as a currency is kind of an issue, that therein lies a big pain point. So, but the potential of the federal government to create some sort of stable coin just gets you interested in the whole cryptocurrency world, because if they're considering introducing this, I mean, clearly, like I said last time, a few seconds ago, this trend's not going away.
Yeah, it's something to pay attention. I love that. Let's talk retention and trying to find new employees. So I know right now we're seeing headlines all over the place with, businesses struggling and they're just giving away the farm to try to get employees to come in. I think businesses struggle because they don't look at the benefits, right? They don't look at like, what can you do to retain, and what can you do to attract? And I think there's this idea that it's extremely expensive. What's your comments there? Like, are there opportunities for people to explore benefits for their business? Are there triggers that they should look at? Are there sizes? Like, how do we be competitive when we're trying to go up against huge corporations?
Yeah, this is one of the many things I do as I work with a lot of businesses is, to keep good talent, you've got to offer benefits of sorts. And so 401ks, health insurance, disability insurance, and there's a lot of other little facets there, but it's not that expensive, depending on what we're talking about and how we set it up. That's usually why a lot of business owners don't have a 401k, for example. They think it's an extremely large upfront cost and ongoing cost. And sure, it can be expensive if you want to look at it that way. But the reality is if you're providing a benefit and you're providing a 401k match of sorts, the end of the day, the business is writing that off, number one. Number two, the employees that I like to think you care about are allowing for themselves to be set up financially for retirement and for protecting themselves from disability and potential early death, life insurance, et cetera. So I think a lot of people need to employees. And I think a lot of times business owners, when I'm having conversations with them, they're interested in it. And what I try to tell them is, hey, I'm glad that you, Mr. and Mrs. Smith, business owner, understand this opportunity. But even if you offer this to your employees, if they don't understand what you're doing, it's kind of going to be, it's a waste of time and waste of money, because if they're not understanding what you're putting in place for them and the benefit to themselves, it's a misstep. So why try to help my business owner clients understand is how to help their employees understand what we're doing. And again, yeah, that's in this environment with, hiring good talent and keeping good talent, that's uber important. So.
Love it. So my encouragement there, right, to all the business owners who are on here, and I always encourage it, is you have to explore the options, right? Don't make an assumption, right? Go ahead and go have the conversation, understand the facts, figure out the financial burden to your company, and understand the cost to value, right? Because it's actually an investment in your company and your employees more than it is a cost or expense.
Yeah, a lot of times the benefits that are set up not only benefit the employees, but also the employer, the business owner. And the business owner, I think, often misunderstands that opportunity, for their own financial planning. So I try to help them understand, hey, I always paint the picture of worst case scenario. Let's pretend everybody that you employ participates in the 401k and you match whatever percent of everybody's salary. Here's worst case scenario, if you want to call it that. This is what you should plan around. The reality is likely not going to be worst case scenario, because there's unfortunately a lot of employees that opt out of some of these benefits. But because they opt out, to me, it sounds like a education barrier. They just don't understand. You just don't know what you don't know. In my opinion, just in regard to life, that slice of the pie with regard to you don't even know what you don't know, I think there's a lot of valuable information in that space, and people like us have the benefit of educating people on that space. So
I love that. And the other side of that's health, right? Like it's not something we'll dive into, but health insurance is a big slice of this pie, and it's something you gotta consider. And again, it's one of those things that like may not be as expensive as you think, and it may be a good investment, right? And I highly recommend. I did an expert interview with Aaron, and there was some great content in there about what does health look like for your business, right? And why you might need it, because recruiting and retention it's hard, right? Like it's not, you can't just stand on the corner with a sign that says hire and employees come flying in right now. So
yeah, especially right now. Absolutely.
Love that. Let's talk core principles, right? So, I guess there's like a couple of conversations I want to have when it comes to finances. The first is, as an individual or a professional, and I'm starting to make some money and I'm interested in long-term investments and financial planning, I go out and I'm trying to hire a financial planner. What are some questions I should ask? Like, how do I know if I'm hiring the right person, right? There's a lot of great planners out there. there's a lot of great planners who are good people, but maybe don't have the right facility. But what questions do I ask, and how do I know if I'm talking to the right person?
Yeah, totally. Yeah, it's a good question. I would say that the question I would have for someone knowing what I know and having some perspective is how that person, how that financial expert is compensated, how that financial expert is incentivized, and really, if they're a fiduciary, that word is, I think, becoming more mainstream because it's an important word. Fiduciary meaning to act in someone else's best interest, and frankly, when it comes to how we're paid, being paid in a way that incentivizes a selfless interest, an interest in your client's money and planning. So, the industry that I work in, there's really just two platforms to work on. There's the broker dealers, and then there's a registered investment advisors. GK Wealth Management is a registered investment advisor. The broker dealers of the world, which are great platforms, and people that work there are great people too. But the Wells Fargos, the Edward Joneses, the Morgan Stanleys, which are all the household names, the names you see on the advertisements. Those are the two platforms. And so when you work for a broker dealer, you're getting compensated a number of different ways, and you're not always a fiduciary. When you're a registered investment advisor and you're a fee-based advisor like myself and many others, there's no commission, there's no incentive to sell X, Y, or Z product or service. And so I think that, knowing what I know, is an important differentiation. And then, I think there's, regardless of the platforms, there's great people, and you can manage money and be successful as a client in retiring and reaching your financial goals at either platform. But as long as you understand it, I think that's the big piece. Is people just in general, with regard to the financial industry, it's just foreign language. Unfortunately, in our education system, what a Roth IRA is and how to manage credit and file your taxes and X, Y, and Z is just not something we all learn. I mean, even myself, I studied finance and accounting, and I graduated starting the industry that I'm in, and I didn't know what a Roth IRA was. I didn't know how to file my taxes. I didn't know how to build credit. I self-taught myself, and of course, growing my business practice, learned through the colleagues I surrounded myself with. But I think it's a really unfortunate situation that people graduate college a lot of times with a lot of college debt and get into real life and just don't necessarily know how the roadmap is put together. So yeah, back to the what professional do we hire and what questions do we ask? I think definitely finding someone competent with, just the generic financial planning world. I think most people that do what I do have some sort of sense of right and wrong and how to guide a client to a successful financial goal. So I think the questions, I think if I could create those questions, it would be, are you a fiduciary? How am I compensating you? What are you doing for me more than managing my assets? Is there more depth that you provide in respect to how do I reach my goals? So anyways, it's a good question. I probably should create some sort of bullet point list, because I don't know if I've ever laid them out. But I could do that.
Love that. Well, I love that. And if you create that, let me know. I'll include it below the video with everything else.
Yep.
But I mean, you covered the basis, right? And I think that's the part, when it comes to being a fiduciary, that's something we've always talked about. And it's interesting because as you were educating me, it makes sense, right? Like if I'm attached to a company, no matter what industry I'm in, there's usually some sort of sales goal or motive to sell a product. Doesn't matter what the industry is, right? Whereas when you flip to the other side and you're more of a consultative or end results based fee structure, the motive is different, because now I have to have my clients succeed. It's like my clients who I do rev splits with, right? So you pay me a % of your total revenue. Why? Because my goal is to help you grow your damn business. And if I succeed, I promise you're going to enjoy writing me the check, right?
Yeah, exactly. As long as long as you guys are on the same side of the football field, going to the same end zone. A lot of different ways to get to that end zone, but that's the analogy I often use is, hey, we're on the same team. When you win, I win. When you lose, I lose. I'm very incentivized to do one thing and one thing only, give you my best advice, period. And I have zero conflicts of interest, which is what I can tell people. It's a great pitch, if you want to call it that, because I just don't have an incentive to provide, X over Y over Z. And it's a cool world to live in once, once you have the ability to, be in the situation I am. And I think a lot of people that do what I do kind of drink the Kool-Aid. They work at the firm that they're at forever, and they're great firms, but it's not the ideal structure, in my opinion, for a lot of clients. And the advisors themselves don't have a ton of perspective because they've worked for this one company for a long time and kind of, lived and breathed that world. And it's not a bad world. It's never a bad world, but there's, in my opinion, a lot of inefficiencies that I've identified and been able to speak to. So.
Perfect. Yeah. I mean, jumping off of that, I'd rather you work with someone than do it yourself, period. So I'll give you guys that advice myself, right? Like, this is not a game that you're probably qualified to play yourself, right? So you need a partner, right? So at a minimum, get a partner. But Griffin, I appreciate the advice on, understand that partner's motive, right? Like what are they trying to accomplish? What's their agenda? Where are they coming from? Yeah. So I talk a lot to college students, and I love the conversation and just kind of sharing wisdom with them, being a young entrepreneur myself and kind of racing into the house buying world and all that stuff young. If you were to talk to yourself, right, coming out of college, what are 2 or 3 tips you'd give yourself when it just comes to money? Not necessarily investing, but just money in general. What are some tips you would tell your college self? Hey, here's some things I need you to do, bud, that would fast track where we're going.
Yeah. First thing that comes to mind is college in general. I think that a lot of people go to college expecting to graduate and getting paid a great salary at the job that they love, but the real world doesn't work like that, and it's unfortunate because we're fed into the system of structure, and the world breeds, and lives on this structure, and it's great, but I think that unfortunately the college student that graduates that doesn't have mom and dad paying the bill, is stuck now with this debt and getting thrown into the workforce and not necessarily getting paid what they want and working in a job that they love in a place that they're comfortable with. So that would be my first comment as to a high schooler graduating, or maybe even pre-senior graduate, looking at graduation, is what does that next step look like? I want my daughter to go to college, but I want there to be a real clear understanding as to what that path looks like, and not just, have a fun 4 years and then be thrown into the, into the workforce and not really have any idea of what real life looks like. So that'd be my first comment. I would say that the second comment, which is pretty textbook, is when you have the ability to start saving, putting money away, the sooner the better. I mean, simple math, compound interest. The quote I use a lot with is a quote from Albert Einstein that says, with regard to compound interest, for those that understand it, they earn it. For those that don't, they pay for it. And so the people that are young and get started and are consistent, they're typically successful in retirement and achieving their goals. And those that are kind of dragging their feet and starting later, they can still achieve those goals, but they're going to have to be, really, frankly, saving more than they otherwise would have if they had started sooner. Not everybody has the luxury of saving for retirement when they're out of high school, out of college. Myself, I was 23, 22 whenever I graduated, and my dad paid my college bill. And so I graduated without any debt and started earning income and started saving income. But another example, my brother-in-law graduated college, didn't have his dad pay for college, and he had an $800 per month payment. and still has it. And so that $800 that I was putting away for retirement is $800 that he's putting away for 10 years towards college debt. And I mean, the simple math equation says that I'm going to be light years away, light years ahead of where he's at. And that's just, unfortunately, the reality for most kids these days. And I think it's because there's just not a lot of understanding going into that situation is the reality. So kind of feeding on point one with understanding what college looks like. Number two, starting to be able to put money away for those financial goals as early as often and being consistent about it. And, you know, the Dave Ramsey's of the world talk about credit and how you don't need credit cards, et cetera. And sure, there's a story to tell there, but, you know, the reality is most people that want to buy a house and buy a car and, you know, live the normal life, credit is important. And, you know, I have a daughter that's 2 and I have a handful of credit cards and I've never paid a dime in interest, but I make my daughter a signer on all my credit cards. When the credit card comes in the mail, I snip it in half because of course she's 2. She doesn't even know how to hold it. But, you know, the algorithms are building credit. And by the time she's 18, she's going to have a perfect credit score. And so whether credit matters or not, I don't know, but she'll be able to go to a mortgage broker and get qualified to buy a home, assuming she has income, and she'll be able to finance a car if she's wanting to, you know, borrow for that purchase. And so that's another piece of the puzzle that's important. That kind of gets, you know, it's there's a lot of differing opinions on both sides of the fence, but that's where I stand is get started building credit as soon as you can and do it smart. And then tax wise, I mean, there's a lot of the tax game is a moving target. So the CPAs are having a fun time right now with, you know, the 2020 changes that happened and the new administration. But I think figuring out how to play the game is important. And unfortunately, most of us aren't educated on that at all, unless you're, you know, being a CPA and going that route. So I think understanding how that world works, because there's two realities, you know, 2 truths to this life. It's death and taxes. And, you know, unfortunately,
you're not getting away from either.
Yeah, you can't get away from either, but you can definitely control on the tax side, you know, how that story looks. And so, yeah, finding a smart CPA that's in your, you know, on your team is an important deal. And me as an advisor, I've met all the CPAs in town and have come to appreciate good tax planning. It's a big deal. So anyways, there's probably a lot more points I could make, but I think those are the first to mind.
No, I appreciate that. And kind of summarizing some of it, you know, I think that, you know, having you know, a stepdaughter who's 16 and starting to look at that college conversation, it's interesting to have that conversation now, right? Like the 2 schools of thought, you know, go to school, get a good degree, get a good job, blah, 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 right? You know, I went to college. I'm the other side, right? I went to college, I paid for it all. And I came out minimal debt because I was one of those really smart students, right? So thank God. But I haven't used my degree for anything, right? I went and started a company and then I started another company. And, you know, so what I have done with those 4 years, whether that's self-improvement, you know, and I think that's something you need to look at. Like if you're a high school student, you're looking to graduate, if you're a college kid and you've made decisions, like one, understand the degree you're getting and what it's going to do. You know, getting an MBA has a lot of legs. Like there's a lot of ways you can use a degree like that. Yep. Looking at your minor, like getting a minor that educates you in the finance industry or financials or accounting is brilliant because money is involved in everything for the rest of your life, right? Yep. So whether that's savings, credit, buying a house, car, whatever, it'd be nice to understand some of that and understand interest and compounding and some of those core principles. You know, and I think the other thing that's missed a lot is there's some great teachers out there, right? They're not all for everybody, but you know, you look at the Grant Cardones of the world and you want to learn sales, guess what? At 18, 17, 16, who cares? Sign up for the course and start learning, because sales is a skill that'll get you ahead, right? Because you're going to have to sell your skills to your boss if you want to raise, and you're going to have to sell to clients if you want to get ahead, and you're going to have to sell to some girl or some guy somewhere if you want to get married, right?
Yeah, totally. Yeah, I think being able to sell yourself is the biggest benefit you can have. And then obviously being passionate about a product or service will follow. But yeah, being able to sell yourself to an employer, to a potential, you know, partner in life, et cetera, it's a big deal.
Agreed. And I think that,
On.
there we go. Now we're back. So I think that another thing that you mentioned that I think is super valuable is, right, getting experts on your team, right? So whether you're an individual or whether you're, especially if you're going to start a business, but you've got to have an expert, right? You got to have experts on your bench. You got to have the insurance agent, the CPA, the lawyer, the financial advisor, the whoever, right? You got to get the experts. I thought that was really good advice. And you're right. Like a CPA, I met with my CPA yesterday, right? And they don't cost you money, right? They save you money, right? Their goal is to help you plan ahead. So great advice there. And then, yeah, the savings as soon as you can. I think, creating a habit is the key, right? Whether that's going to the gym or saving money, right? Both of them are habits that you got to build. So I love that, man. I appreciate those statements. And I hope that the college students or the high school students who are listening to this, I hope that you guys understand that as well. There's some advice here that I wish I had heard, and I may not have been ready to hear it, right? So it's okay, but at least you're hearing it. Totally. Let's talk college savings, right? So we talked about, is college good, is college not? If I'm expecting and I've got a little one coming, what are my options? Like, how do I plan for college correctly, or how do I create a fund for my student? What are the penalties if they don't go to college? What's that world look like?
Yeah, totally. There's a lot of ways to do it. I would say I'll just tell you what I do for my daughter, and then I'll kind of build on the other avenues. But the two plans that I have for my daughter are the 529 plan, which is specifically an account that you put money in, invest for specifically higher education, whether it's high school or college. Now they've expanded the usage of those dollars to more than just college, high school, etc. And then there's what's called a custodial UTMA, Uniform Transfer to Minors Act. Simply put, it's a brokerage account for your kid. While your kid is a kid, the dad, the mom, whomever is the custodian in charge of funding the account, managing the investments in the account. I overfund the brokerage UTMA versus the 529. I put money in both, but I overfund the UTMA just because I don't know what college looks like in 16 years, number one. Number two, in the sense, and back to that first point, I don't know what college looks like in the sense that, does the government pay for it? Is it going to be as relevant? Is it going to be as important to an employer? I don't know. But I do want my daughter to go there because I love the structure and opportunity that creates and the doors that it opens. Not that I think it's contingent on success. I definitely don't think that. The UTMA brokerage account, I overfund because I like the flexibility it brings. I can use those dollars for whatever, whenever, for my daughter's benefit, whether it's buying her first house when she's 18, whether it's my daughter traveling around the world to gain some perspective on what life is like outside our luxurious United States of America, starting a business, what have you. And so I like the flexibility that brokerage account brings. Ultimately, both of them are for my daughter's benefit. They just have a little bit different purposes. The 529 has some tax benefits. The UTMA does not. So there's trade-offs to both. But depending on the individual, and I tell all my clients, I say, here's the world of options you have. I don't care what you choose. I just want you to be educated. Once you're educated, as an educated client, you can make an educated decision. That's all I want for my clients with regard to every plan. Outside of those two accounts, parents sometimes just put cash in a bank account, which is fine. Bank accounts don't grow, but that's another way to do it. Some parents that have the luxury of just paying for their kids' college through their cash flow because they make enough money, that's fine too. But if you have the luxury of when your daughter is a thought or born to starting an account and putting money away, just like any other financial goal, starting early, saving often and consistently is the way to be successfully achieving that goal. And then, of course, finding a good steward of that money, whether it's the mom and dad themselves or whether it's an advisor, Finding a good steward of that money to make that money work for you is the next important piece of the puzzle. So penalty wise, if you don't use the 529 for school, you can use it and change the beneficiary. So if you have 2 kids, 3 kids, and kid number 1 doesn't use it, you can transfer that money to kid number 2 or kid number 3 or family members. Let's just say you don't transfer it to another family member, and you take that money out and not use it for school. You're paying penalties, a 10% penalty on the growth of that money and income tax on it, which isn't the worst thing in the world, but it's a tax favored account. And the IRS says, as long as this money is used for college or higher education, we're going to give you some tax incentives. If you don't, we're going to remove those tax incentives. It's pretty simple. The brokerage account, just like any normal brokerage account, is a taxable account. When you buy Apple stock and you sell it for a gain, you owe capital gain tax on that. And there's a little bit different, slightly different tax threshold for kids, because often kids don't have earned income, and so their tax brackets are a little bit different. But there's taxes owed on that brokerage account, period. Hence the flexibility, because it's taxable, the IRS says, hey, you can use this money where you want. So again, like I said, and as with everything, there's benefits and trade-offs to both. But I think the overriding comment I'd say above all that to all you parents is that you can't borrow for retirement and you can borrow for education. Not that I think you should favor one or the other, but I do have a lot of parents that come to me that really are behind in retirement savings and are talking to me about, hey, I want to set up a college account for my kid. And I'm like, I respect that, but we're having the wrong conversation right now. You haven't taken care of your own business, and your own business, as unfortunate as it is more important than your kid's college savings. I want you to do both, but if it's one or the other, you got to save for yourself. Your kid can borrow for that, and I don't want them to, but that is an option. But borrowing for retirement just doesn't exist. So
great advice on the end there. I like that. That's a great way to think about it. And again, it relates to a lot of things in your life, right? If you can't take care of yourself, how are you going to take care of someone else? Whether
put your
that's
mask on first, then on the others, right?
Right. Good advice, man. I know there's no one size fits all. I think that's a message we have to say 14 times on here is, none of this is your advice to someone, right? This is general advice, and it's educating you guys on there's options, right? So it's not just a college savings account. There are more options that you might want to have a conversation on or know they exist, and then see how it fits into your plan as your family, right? Same thing I talk to business owners about. I can give you general business advice, but it may not be relative for where you're at in your business journey, right? I need to understand your business, your goals, and where you want to go. If you want to have a lifestyle business, my answers are different. If you want to take your business to the moon, my answers are way different, right? So, you got to apply your situation to it.
And I had one more comment on that too. That was kind of relevant to one of the first or second questions in respect to hiring a financial advisor or consultant, whatever. When you say knowing your options, that's what sparks the thought. When you have an advisor or a consultant or financial manager, whatever you want to call them, understanding what optionality they're giving you is a big deal. Most of the people that work in my industry sell what their company wants them to sell. And it's not that what the company wants them to sell is a bad thing, but the reality is the consumer has no idea. They have no idea whether the product the company that wants the advisor to sell is good or bad. And so when the professional is talking to the client about a product, service, whatever, that their company is telling them to talk to their clients about, and not necessarily giving the client the lay of the land, I find that to be really a big issue, because I come on the exact opposite side of the fence. I say, Mr. and Mrs. Smith, here's how the world works. Here's how the financial industry works. I don't care what we do. I get paid the same no matter what we do, but I want you to understand what your options are and provide some transparency to this industry. And once you have some sort of idea how this works, then we can get more focused on a specific direction. But if the advisor is pointing you in the direction before finding out who you are and what your goals are, and selling you on a great product, that's a usual red flag. So I just wanted to throw that in there.